Hey guys, welcome to another episode of the Texas Blockcast. This one is a special one. We are joined by Dr. Adam Back. He needs no introduction, but I will provide a few pieces of his background. He is actually the only person to have been specifically mentioned in the white paper, in Satoshi's white paper, and received a personal email from Satoshi related to Bitcoin because of his work on Hashcash in the years prior to Bitcoin. Prior to the white paper being published. He is the founder of Blockstream, has been an instrumental voice in the Bitcoin industry for over a decade now, I guess coming up on 15, 16 years now. Yeah. And we're honored to have him in Dallas, Texas. Dr. Back, thanks for joining us for the podcast.
Yeah, thanks for having me on. I'm pleased to be here.
We could take this conversation so many different ways, but I think we want to talk a little bit about, well, first of all, we have to mention that it's Bitcoin Pizza Day today, a new all-time high. Any thoughts on that at the outset?
Yeah, I guess it's an object lesson, and I don't know how the guy feels. Hopefully he had some more Bitcoin other than what he spent on those pizzas, because each year it's generally an even more ridiculous price per pizza. It was apparently 2 pizzas, but they're $500 million or 550 million each or something, right? At this point. So there's this debate between don't spend your Bitcoin, save it, and spend your Bitcoin in a circular economy. But I think the way I look at it is I don't want to be the pizza guy that has the regrets. So there are a lot of places where actually spending Bitcoin is more convenient because credit cards just kind of fail on you every time you travel. To call them, it's a nuisance. So a lot of things, Bitcoin is actually more convenient, but then make sure to buy it back like soon afterwards, maybe buy a little bit more if you have some cash left, just to avoid the pizza experience.
Yeah, if you buy it within a day, you should be fine unless we have a rip up.
Yeah.
Well, okay. So I want to talk to you about a couple different things, about Blockstream, about Bitcoin mining. Also, we can't avoid the conversation of the day, which is this op-return battle, but we'll save that for the end of the podcast. Tell me a little bit about the early days, and you're welcome to go back as far as you want, even to the first email that you received from Satoshi. But I'm kind of more thinking about Blockstream and founding that a few years later, and how Blockstream has evolved from where it started to where it is today.
By 2013, I'd done the rabbit hole, gone down the rabbit hole, tried to read everything I could, ran out of things to read because there wasn't much documented at that time, providing detailed technical explanations of how things worked. And so I figured, well, there's got to be some developers maintaining and evolving, like improving. So I'll find where they're hanging out. And that was on Bitcoin Wizards IRC. Uh-huh. So I went and peppered them with questions, to catch up with how it worked. And then because I'd been involved in electronic cash, implemented some libraries and protocols, going back to probably mid-90s, I figured, well, maybe I can improve the privacy in Bitcoin because it's great that Satoshi fixed the problems that caused the previous systems to fail. Namely, they were centralized, they required a bank interface. So Bitcoin solved those technical problems that, myself, Hal Finney, Nick Szabo, Wei Dai, and others couldn't quite figure out how to assemble. So that's cool, but the privacy is worse than some of those previous systems. So I figured, well, maybe there's a way to add some privacy back. And so I used some specialized knowledge of some obscure things and optimized them and figured that they would apply to Bitcoin. So that became confidential transactions, which is live and used since 2018 in Liquid, like a Bitcoin layer 2 or sidechain. And initially the concept was, well, let's see if Bitcoin can adopt it and integrate it, right? And so just interacting with developers and learning about the change process, I realized it'd be quite difficult to get complicated change into Bitcoin. So rather than, getting angry, which is what some people do when Bitcoin won't change, I was like, okay, we need to figure out how to make Bitcoin more modular, to have a layer so you can do more opt-in things and more kind of rapid innovation without needing to mess with a base layer. So that's where the sidechain concept came from. And the sidechain was an existing word, but what I was proposing seemed closest in concept to this sidechain generic idea. And So the idea is it's a kind of another chain that has no native token, and you import Bitcoin into it as the native token. And so it's connected to the Bitcoin chain in some technical way by being merge mined or pegged, so it's the same currency. And then you can put a different payload in it. So it could be a different script system. So what we did is the Bitcoin technology is the most robust and battle tested. So we just added features to it that we thought interesting. So we added confidential transactions. We added Schnorr signatures, so all the way back in 2015. So Liquid had Schnorr signatures like way before Bitcoin. We fixed the SegWit thing out the gate because that was before SegWit was in Bitcoin. And we had one of the time locks that's since been added to Bitcoin some years ago, but before. And covenants. So we had covenants in there from 2015 as well.
Which was a lot of drama on the main chain too.
Yeah, which Bitcoin's currently having a nice discussion about, right? And so, the interesting thing with that is there's a little bit of, so Liquid is used for lots of different things. I mean, you can build a bit of technology, but you can't necessarily predict how people will use it. So it's used for different things. One is for trading, so you can do trustless swaps and kind of use a hardware wallet to place a limit order where there's no custodian. You have a central order book but it doesn't have custody. You can be offline when your order is matched and it just ends up in your hardware wallet. So that's pretty nice. Probably the most secure way to trade on a Bitcoin, stablecoin pair or other assets. And then we have the confidential transactions, which makes it so that, if you and I were to transfer some Bitcoin, some stable coins, or, there are tokenized shares on Liquid. There's MicroStrategy shares and other bonds and different products from different issuers. And, so somebody looking at the block explorer or looking at the blockchain, they wouldn't be able to tell if that was a Bitcoin or a Tether or a MicroStrategy share or how much it was. Is it one Bitcoin or is it 100th of a Bitcoin? They don't know, right? And so that's actually good. And that was my concept for confidential transactions for Bitcoin, which is, it gives away more correlating information, helping provide hints that, this is probably the change and this is the original, to try and figure out which is the wallet, which UTXOs are related. So if the amounts are hidden, you've got that benefit, and also you've got the kind of security benefit. If you see a large UTXO and somebody peels a little bit of Bitcoin off it, that's bad because that guy has got some Bitcoin worth chasing, right? So occasionally people will do ill-advised things like flash like a ridiculously large wallet and make a small donation. Like that's not good. Or they will talk about how many Bitcoin they had or they have in 2013, and now it's a lot of money. Like at the time they thought it was harmless, right? So you generally don't tell people what price you bought when you started, how many you have. It's not a good idea because as the pizza guy found, what was the price of two pizzas is now $1 billion, right? He was like crazy early before there was a price, so he kind of set the price. So of course that's a kind of ridiculous multiple. But yeah, so the confidential transactions provide some kind of security and privacy advantages, and we extended it to cover also the asset type. So I had these ideas, and then I was like, okay, now that's actually viable. Let's build it. And I realized that would take a lot of specialist people, right? You'd need user interface designers, and to build like a whole layer, you need a block explorer, you need a wallet, maybe you need hardware wallets, maybe you need some mining to merge mine it if you do merge mining, and you need people at the kind of core consensus protocol skill set. You need like middleware, you need wallet, Android, iOS, desktop, you need everything, right? And so that starts to look like a team. So I then turned my focus to raising money, and by 2014 we had Bitcoin started. So it took about half a year or something to get it off the ground, and we were able to recruit a lot of very clever Bitcoin brainiacs to help us with the internals parts, and recruited skilled people in all other areas of user interface and different platform skills.
And when did Blockstream get into mining? It was a couple years later?
Yeah, it's complete. I mean, originally we were thinking to start immediately, but we didn't get to that for a few years, and we bought some Bitfury equipment actually and mined that, and it was very profitable actually.
Were those GPUs back then?
No, it was like an earlier generation ASICs in a shipping container full of these miners, basically, hosted in Canada, and yeah, it was a good time to mine. We did very well on that, and then later we built our own data center initially on the hydropower in an industrial estate in Montreal, and then later expanded. So we actually, at this stage, some years later, we had some other kind of mining related securities along the way, which we can talk about in a sec. And but more recently, we've spun out the mining company as a separate company with its own investment, additional investments, and we diversified out of Canada into the US. Montreal and actually the Quebec province has a lot of hydropower that's underused. But the power company is a crown corporation, so it's owned by the government. And so the argument that you're going to make more profit if you sell us more power is not persuasive, unlike with a free market, kind of deregulated power infrastructure where you can have a normal commercial conversation. So as they didn't want our business, that we were offering to, go 10 times larger or something, they wouldn't give us the power at that point.
Political reasons too, I'm sure.
Yeah, I mean, there was just some kind of silly sequence of events. Like when we went there, they were recruiting people to come to Montreal. Come to Montreal, use the power, right? That was the pitch from the kind of local government business development group. And so we did. We were quite early in there. And then at some point, they were taking requests for quotes for people that wanted to do some mining, and they got a lot of them. And so they started to get scared, like, oh, if everybody comes, we'll have power blackouts. But what they didn't understand is that, there was no proof that you had the funds. So everyone and their dog put in a bid because they thought, well, if I win the quote for 100 megawatts, I can go raise money. I can go hire people that know how to do this, and they were just a guy with an idea, right? And so it was silly. It was overscribed. 10 times more than the entire Bitcoin network, because everybody thought if they could just get some power, they could start a business with it, right? And they took it literally. And people were trying to tell them, no, that's impossible. The network's not that big. Because at the time, that province, there's 65 hydro dams in that province. So there's really a lot of excess power. And the unused power was more than enough to power the entire Bitcoin network at that time.
Probably 20, 30 exahash at that time?
Yeah, it was like a lot earlier, so like 2016 or something. But there's like really a lot of excess hydro. But anyway, I think there was like an election period, and some politicians or media got hold of this story, this kind of scare story that they're going to be blackouts because the miners were coming. So they called a moratorium, like a politically inspired moratorium, and no more power to miners. And that was it. So we tried to navigate, and it was like, oh, this is hopeless. So we'll just expand. If they don't want a business, we'll do it somewhere else.
Yeah.
So Texas is kind of a deregulated power infrastructure, is open to expand, has a lot of wind power, and it's quite a good power location, and you can participate in grid balancing schemes. Of course, when there's overproduction, they generally have to get rid of the power anyway, and so they'll pay you to help. Because if you don't take the power away, it can actually damage the infrastructure.
Yeah. And
correspondingly, if there's kind of a hot day or a winter storm, they will, the power price is dynamic. So you'll get your price feed on the power and you spin some miners down. Or they also have schemes where they can plan ahead a bit and pay people to, you can sign a contract and you can get paid to turn it off for a bit. So that's all kind of a positive part of the grid landscape, because the money that the Bitcoin miners collectively bring to the state is making the power producers more profitable, so they can get project financing to build a new power generation plant, and then they have a ready off-taker that can use the power from day one, even before they're grid connected. So I think it's become a central part of balancing the grid, building a more robust grid, expanding power, and I think in the sort of the ESG conversation, sort of lost for a while. It's coming back to sort of pragmatic reality. Lost the concept that actually power is, part of human prosperity and has been that way for hundreds of years. The cities and the countries with the highest power capacity, with whatever technology is available at the time, that's very strongly correlated with prosperity and economic growth. So you can see the direct correlations. Like the Bitcoiners come in, they pay, power infrastructure gets expanded, grid gets more stable, cost of power gets cheaper, and then the next wave comes in, the AI guys come in, and they're less price sensitive because their equipment's a lot more expensive. So the power is like a less of a factor to them, and they set up shop because there's lots of power. And then the Bitcoiners build some more power or go somewhere further away where there are less workers. I think the AI guys probably need more manpower, and expand the next grid, prospecting for cheap power, basically.
Yeah, it's a very symbiotic relationship. And you guys are now here in Texas. The network, about 17%, 18% of all Bitcoin hash rate is in Texas now.
Wow. Yeah.
So we're up to 3,400 megawatts across the state. And most of that is grid connected. Well, that's actually 3,400 megawatts is all grid connected. There's a few, natural gas sites that are here and there, 3 or 4 megawatts here and there, but it's harder to track those. Some of those are literally off the grid.
Yeah, I mean the Blockstream mining, which is a sister company now, is the couple of the sites are kind of the dual power connection. So they have a direct connection to a wind farm, and then kind of fail over to the grid, and so it actually participate in multiple aspects of paying different companies different amounts depending on the power price and the wind speed. So we'll use the wind. If that runs out, if it's not windy enough, we'll go to the grid. If the grid gets excess power, they'll pay us. If the price goes up a bit, we'll pay them. If the price goes up a lot, we'll stop. And so it's a very dynamic thing going on there, and we're getting real-time pricing, spinning miners up and down. And more recently, we started participating in some of these kind of pre-arranged contracts where they can do power planning in collaboration with large off-takers. So I think it's good. And it shows you the power of the free market, right? If you set up wholesome, sensible incentives, people come and set up their businesses there, right? So it's brings money into the state. That's
right. We did an economic impact study a couple months ago with the Perryman Group that showed in 2024 there was $4 billion of CapEx in Texas for Bitcoin mining.
Yep.
About $1 billion in personal income paid to W-2 or 1099 workers across the state. 12,000 employees.
Yeah, I mean, when we were setting up in Montreal, we were like hiring every electrician we could find to like build out that data center fast, right? So, like you said, that's $1 billion in employment, local employment for all the kind of construction and electrical workers, the whole setup. Yeah.
And even the ones who are there managing the power or managing the data center, not as many employees, obviously, after it's constructed.
Right.
But certainly still rural jobs are hard to come by in the United States and probably everywhere. Cities are where the jobs are. And so to have these rural jobs come up, 12,000 jobs in Texas is pretty significant.
Yep.
So now let's shift gears a little bit to the software side of things. You're far more technical than me and probably far more technical than the majority of the audience. But I'm going to risk asking you questions about software and technical things. So there's this big debate going on right now with op returns. And do we expand the number, the data availability op returns? Some people say no, that'll allow for more spam. Some people say yes, it'll allow for more composability, I guess, or more. You can do more things like Bitcoin DeFi could be a little bit more Turing complete, if you will. Although it's not ever going to be Turing complete, but you know what I mean. It kind of expand what you can do.
Right.
Where do you fall in the great debate?
I don't like email spam was where the proof of work scheme that Bitcoin is using came from, right? So I was operating There's this sort of way to get email privacy is anonymous remailers, and that was a kind of network, like a Tor network, but for email. And so it was a way to get privacy, and it was operated by volunteers because there was no way to monetize it because there was no electronic cash to pay. And if you paid in a non-anonymous way, you would undo the point about doing it anonymously, right? So I was operating one of these, and people were spamming through it. And it wasn't even commercial spam. It seemed to be intended to annoy the system administrators at universities and Usenet news sites. So there's a few thousand, I think 5,000 Usenet news site administrators. And so they were just sending like random noise through it. And I think the thought was, from what we could guess, that they were trying to trigger the system administrators so they would block the remailers. So they didn't like privacy, so they were trying to like sort of hurt the reputation by abusing them, kind of thing. So anyway, I was thinking, this is a problem. How can we combat the spam? And usually, what you do to combat spam at the time was you just block the sender's IP, the mail server IP address, you block the email address, and it goes. But you can't do that because it's anonymous by design, right? So it's like, what can I do? What can I do? What's the fundamental problem? It's like, well, the fundamental problem, so because like a rethink from first principles, is that it's effectively free to send emails. So, of course, if we had a working electronic cash system, you could just charge for the email transit, and that would like reduce the problem, right? But there was no, let's catch-22, there's no working email system. There was no PayPal. This was like back in 1997. I looked at what does it take to get, a credit card processing account. Okay, that's difficult. You need a company. You need and they may say no. And besides that, many people in emerging markets won't have it. So then you need to free and open global communication that everybody can participate in. And anyway, that's identifying. So that's not going to work, right? So then I hit on the idea of this kind of proof of work concept. So actually, even though you couldn't pay people, you cause the sender to incur a cost in a way that's verifiable to the recipient. So they can instantly verify it. So, while you're typing your email to me, your computer could be churning away, making a postage stamp. It might take you a couple of minutes, 5 minutes, something like that, but you won't notice because you're writing your email. And when I get it, my software will verify it, and that will, that won't be a problem to you, but it might be a problem to one of these kind of commercial mass spammers that are like, renting bulletproof hosting, because they would tend to get kicked off their hosting provider. But there's some providers that are, you pay extra, but there's no questions asked and they won't cut you off. And they're like, sometimes they're in Russia or different places where they're just going to ignore, the law enforcement complaints and stuff. So it's called bulletproof hosting. So they would do that and it would just spam everywhere, and it's a problem. So yeah, that it would become a problem to them because now they wouldn't just need bulletproof hosting; they need a lot of compute, and it increased their costs, right? Yeah. So that's what I did, and so you could see that the genesis was in spam wars, which are still were raging pretty hard at the time, and there's still an issue, right? So anyway, now we go full circle. We have an electronic cash system. So there was some early electronic cash systems ideas that used the hash cache as part of the. So backing up a sec, there was a previous electronic cash system that had a lot of privacy, but it was centralized, and there's a lot of excitement about that. It's called DigiCash, and it's operated out of the Netherlands by this mathematical cryptographer David Chaum. He was the guy that invented the protocol, but also the CEO of this startup trying to commercialize it.
Charlie Mintz, is that?
That's the one, yeah. And so it's very good privacy, but it has a central database which holds the double spend information. And so, if you lose that double spend database, you don't know if the coin's valid or not anymore, right? So it's kind of game over.
Yeah.
And that's what happened, actually. People tried to use it, myself included, to actually bootstrap a value. Like they set up a demo server, and they said, we're only going to issue 1 million units, and they'd email you a few so you could start playing with it. So we figured, let's just start selling stuff for it. Assume these tokens are worth $1. Should be able to bootstrap $1 million worth of value between a few hundred people by circular economy stuff. And so we started on the experiment, and then the company went bankrupt. and the database went offline right in the middle of the experiment. So like, that's sad. We were excited about this, and so we, people who were interested in it didn't give up. They just tried to figure out, draw some lessons. What went wrong? Yeah. What's the real problem? Well, the real problem is it's centralized. So, it's a few years later that I published Hashcash, the anti-spam thing, postage stamp, and within a day or two, multiple people were realizing that it could be part of the solution because, one of the challenges for DigiCash is they needed a bank account because the only way to get money in is you wire money in, you convert it into coins, and these coins are effectively stable coins, right? They're like euro denominated or something. And then you have to get them out again. And so, not only do you need a central database, but you need a banking relationship, and maybe the banks don't like it.
Yeah.
Right? So then they don't get a bank account, and then the whole thing's dead again, right? So they realized that, so lots of people realized simultaneously that, well, now you have a way to have digital scarcity. It looks a bit like digital gold. You could mine the coins, and you could, the free market could figure out what they're worth, and you won't need a bank account. So that's part of the problem. The other part of the problem is you need it to be a sort of peer-to-peer decentralized system, because we've just seen what happens with centralized systems. They fail, and then it's over, right? So, there are various ideas about how to do that, but proof of work was part of all of them after that moment in time.
Yeah.
But it wasn't until there was a number of challenges, about taking all human policy, monetary policy aspects out of it. Some of the early systems had kind of human judgment in, well, how much work should you have to do for the coins this month? Okay, that's not very decentralized. Who's going to decide that? Like a group of humans? Not good, right? That's what the current world looks like. So it was Satoshi that finally solved that problem, because what he realized is, this is inference, right? Because he never explained himself. It's like, here's the white paper, here's how it works. Not much commentary about the thought process or design process or series of ideas that led him there. So the rest of it's like speculation of how he arrived at the idea, but we know how Bitcoin works, and you can see that the thing it does differently to those previous systems, it doesn't try to be a stable coin. So it's like digital gold, the market will tell us what it's worth, but what it does automate is the supply curve. So it kind of simulates the increasing scarcity of like mining gold or something like that. Mm-hmm. So that was a key part of the solution. So now back to the current day, and the spam problem's back with us again. It's kind of like gone full circle, right?
Yeah.
It's so 97, 2007 to 27. So it's like 18 years later, and we're back at a spam problem. And so, there are people that are posting JPEGs on a Bitcoin chain, and you might say some people's view as well. They paid the fees, like it's a free market. Anything that pays is valid. And I'm like, okay, it's like that's one view, but there are people who would like to hold Bitcoin. The most secure way to hold Bitcoin is to have a main chain UTXO, right? And there's a scarcity of these things. So the fact that there are, some thousands of JPEGs in the chain, and each one like obliterates the space for like maybe 100 UTXOs or something.
Right.
So, actually now there are people in the emerging market who wanted to have, bearer control of UTXO that were at the margin, couldn't afford one or couldn't get one, right? So
because the transaction costs are then increasing, or
the UTXO
space is expanding. Yeah.
Yeah. So there's like a limited space, and people are using it up for non-transactional things.
Yeah.
So there's the free market view, which is they paid, but utility view is like, well, actually, that's not what people signed up for. That's not helping the Bitcoin adoption story.
Right.
It's reducing people's security because now they're going to use a custodian or, something else, right? To get that, like use an exchange account, use a custodian or a custodial wallet. They'll do something in the alternative, which won't be as good. And, presumably that sort of slows down Bitcoin adoption a bit.
Yeah.
Because you don't get full enjoyment, right? So, Bitcoin's hard to scale. The technology is hard to scale. Like blockchain technology is hard to scale.
It's hard to stop too, though.
Yeah, I mean, that's a very important point, right? Which is, so people see the spam and they want to stop it. Like, well, how can you stop it? Like Bitcoin's a censorship-resistant, permissionless system by design. So it's kind of like the remailer story, right? It's anonymous and permissionless, so you can't stop them, right? And you probably shouldn't want to stop them. I mean, you shouldn't want to have the power to stop them, because if you did, you might have discretionary power to, block other things. And the main network should be neutral and permissionless and censorship resistant, right? So it's kind of a tricky situation. The use for op return originally was like a little data item. So if you were doing some kind of wallet coordination protocol, you could put like a checksum in it. It was limited to 40 bytes, and after some debate, it got raised to 80 bytes some years ago. And since Taproot, there turned out to be there was another way to have bigger scripts. And so the JPEG guys moved over to hiding the JPEGs inside what ostensibly looks like a script. So they'll just make something like if false. So, okay, it's not going to happen. You put a bunch of bytes, which are going to get ignored. And then you got the end if, and that's how they're transporting, the 100 kilobyte stuff, or, the whole megabyte stuff once in a while.
Wow. And
they're also getting a SegWit discount because the script is part of the witness. So it's 4 times cheaper than op return. So actually nobody's using op returns for JPEGs because you get it 4 times cheaper in the other way, right?
Yeah, yeah.
And so actually, while the op return is being framed as, spam related, it's not really, because they're using the other system, right? So whatever limit is on the op return, it doesn't matter. That's not where they're going, right?
Right.
So now what the actual use case for the op return is that there's a new type of Bitcoin layer 2, so it's your kind of DeFi point, right, called BitVM. Mm-hmm. That's a very innovative new idea that you can verify equivocation proofs for a zero knowledge proof directly with Bitcoin script, which is kind of surprising. People didn't see that coming. But Robin Linus figured it out that you could do that, and therefore you could kind of do a layer 2 using it. You could use it as a kind of decentralized peg. And like Lightning, there is a kind of penalty transaction. Mm-hmm. So you set it up, and if the person you're relying on cheats, you can prove it. And then you can take the coins, as that's the penalty or their incentive to not cheat. Now, unfortunately, the amount of data they wanted to store was more than the 80 bytes. It was like 160 bytes. So, and they do care about decentralization. The trick with the spammers is they don't really care about decentralization. So they'll just use a mining accelerator, right? They don't mind if it goes directly to a miner. So no kind of policy stuff is going to stop them. But BitVM does care, because they want to, if this gets censored by a central miner, they could lose a lot of money. So they really want it to be standard and relayed and available to all miners, and to get mined as soon as possible, and not rely on a central party for it. So it's kind of like a Lightning-like thing, right? You need, if your counterparty, tries to spend an old version where you lose money, you have a limited time to counteract that. And so you want to make sure that it's visible everywhere. So you want it to be standard, and it didn't fit in the 80 bytes, so they stuffed it into public keys, which is not good, because it's the least scalable part of a node is the UTXO set, which is cached in memory, and the memory is has to be fast access, and it's small.
So you have fewer nodes because it takes too long to spin them up.
Yeah. So people realize, the developers realize, well, this is bad. That 80 byte limit is actually starting to cause side effects, which is
unintended.
So now they're put into public keys. They're doubling it on the memory per UTXO. Yeah. I mean, they're not very frequent UTXOs, but it's kind of a bad incentive, and they're not. They're just doing it because they have to, because they need to be decentralized. So the natural thing would be, maybe we should increase the op return to 160 bytes, because it's a cool use case and it might open up scalability in a new type of layer 2, right? Wow. So that was the start of it, and then it was miscommunicated. It was misunderstood as being, and they also didn't say let's increase it to 160. They said let's remove the limit and deprecate the ability to configure a limit, and then it all went wrong, right?
Yeah.
So now people are hearing more of the details, but it's not a consensus rule. It's just a kind of node relay policy or a miner policy, what they select. And so you've got different miners doing different policies and different nodes doing different things. So, sometimes these things are just left as a configuration. So, different nodes and miners can do different things. It's not the most efficient thing because there's some kind of network efficiency loss where, data won't get relayed as efficiently if nodes don't have the same view of the network. But I don't know.
It'll go one way or the other eventually, probably, right?
Well, I mean, there are a few choices. Like one is to do nothing, which has the side effects. You just increase it a little bit to accommodate this kind of use case, or the other is to like remove the limit. So I think where it's going at the moment is to keep the configuration so people can override it, but like lift the limit. Actually,
so kind of the middle path.
That's why people are saying, "Oh, you're like removing the limit. The spammers can spam without limit." Like, no, they're already doing that. In the other formats, it's 4 times cheaper. So I think like kind of middle ground would be to limit it to 160. But I don't know. We'll see what happens. It's not concluded.
And it's interesting. People might ask, well, like, how does it get concluded? It's like, well, you got to win over a lot of different crews. You got to win over the developers, core developers. You got to win over the people that run nodes, and you kind of also have to win over the community.
Yeah.
The users.
Well, I mean,
you have to win all of them, but
Yeah, I mean, there's a lot of you can't stop them, and you shouldn't want to going on here, right? Which is you can't stop people placing policy limits because they can modify the code, they can run a different node software.
Yeah.
And you can't stop the spammers because it's permissionless, it's censorship resistant. You can't really stop the miners from doing anything that's consensus valid, which includes 4 megabyte JPEGs ultimately. And so you can I mean one line of thought is, well, why don't we make a heuristic to recognize the if zero or if false encoding and make that a limit, say, so it's not transacted. But there are infinite varieties of that. They could do if 0 is greater than 1, and you block that. And they say, oh, so 0 is greater than 2, you block that. And it just goes on forever, and you lose, right? So that's the arms race. But I think philosophically, people are also saying, well, we shouldn't give up. Let's do the arms race. We've got to stop them, right? That's people's instincts. They don't want, they're trying to protect Bitcoin. I think the other argument, because I'm a little bit in the middle on it, because I don't like the spam, but I realize the technical dimension. But another argument which I found persuasive is in 2013 I'd proposed this kind of different privacy thing. So not confidential transactions, but committed transactions or encrypted transactions. And the idea there is that you do some different cryptography so the miners can verify that a transaction isn't spent when they process it, they mine it, but they don't know what the inputs are or what the outputs are. And so if you do that, then you can't block it because you can't read it. You can't say
know which is.
You can't know what it is, right? And then maybe you can know the size of it, but you don't know what's in it. And then after it's mined, you broadcast the keys to look at it through the network, and when you transact, you give the keys to the person you're transacting with. And so that shows that, ideally, miners and nodes shouldn't have the information to even tell what something is, actually. Like the fact that we can is like a side effect of current technology limitations. So if you look forward to say, well, how ideally would we want a network to be organized, then we wouldn't be able to. So therefore, it's probably a bad direction to get too attached to the idea of being able to, make selective decisions.
It's incredibly complex, nuanced, and there's no easy answers.
Yeah,
it's a tough debate, and I appreciate your input on it because I learned a lot just in this conversation about it, and we need to get some resolution one way or the other because the dissension could cause some people to try to fork the chain, or that's a worst case scenario, but
right,
it could go off pretty badly.
Unlike a centralized company, and you got to view most of the altcoins as centralized. They engage professional PR teams. If you see, they make a change to the network, they make a hard fork.
Yeah,
it's kind of like you've seen that TV clip where they got different journalists on different networks throughout the US saying the same catchphrase, and it zooms out, and there's like 64 of them saying like it's double, 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 and they're all saying the same thing in lip sync. So, you watch some of these net hard forks in some altcoin smart contract chain, and, there's hundreds of social media accounts and articles saying the same thing. There's clearly corporate PR organized behind it. Bitcoin's not like that. There's no company, there's no marketing department, there's no CEO. If they're having a technical trade-off debate, it's going to be out there in the open. So you're going to see it, right? These guys are like, the centralized company altcoins are behind closed doors. They're having those conversations.
They've already had the debate, and then they decided on where they're going to go.
And then you get the marketing message, right? So you don't get the marketing message, you get to participate in the debate. And, it's not what people are used to. But ultimately, everybody involved cares about Bitcoin deeply. That's why they're arguing so strongly, right?
Well, hopefully, cooler heads prevail in the discussion. But you are right; people are passionate about it, and a good reason.
Yeah, I mean, I don't think it's going in a direction of us even a soft fork, because that's like too complicated and it doesn't really achieve anything. It's more like a policy thing about the effectiveness of policy, because you can run a policy on your node and you can tweak it so that it blocks some formats, and the NOTS implementation does that. It recognizes the if zero stuff and it won't relay it. So some people like that, and some people think it's an arms race. It's probably not a good direction. So that's this kind of node policy argument. But ultimately, people can do their own thing too, right?
Well, we appreciate you sharing your knowledge and wisdom on the topic. And I know we've got other things to get to today, so we're going to have to wrap the podcast up. But ladies and gentlemen, thank you for spending your time to hear the conversation with Dr. Back. You can certainly find this on YouTube, Twitter, Apple, all the places where you get your podcasts. And you're sure you're well aware of where to find Dr. Back on Blockstream and how to connect with his company. So thanks for your time, and we'll see you on the next one.